Hello and welcome back again here. Today we are going to have a look at a turnaround stock. And some of you probably know what it is. They got a strong brand, celebrity founder, and they make organic products. Okay, so let's jump into it here. Honest Company. The Honest Company. You can see here, why should we even look at this stock? It's down 59% the last year. I mean, the stock market is sleeping on this stock at the moment. I mean, it's down quite a bit, but it is what it is. If you have a look at it, we can see here that the market cap is at the moment 280 million. So this is a very small company, and they are right now trading at about $2.40 maybe, about there. What is the Honest Company? Okay, let's have a look at it. Honest Company, what do they make? They make organic products like this face and body lotion. They make some eyeliner, I believe this is lotion, where they collaborated with Disney. They make diapers, they make cream, and they make things for babies and health products and stuff like that. It's really a not a healthcare brand, but it's a consumer brand, but it's organic, right? Basically, they sell baby products, personal care, and it's clean, non-toxic products. And they are in major retailers across the US like Target, Walmart, and then they used to sell on direct to consumer on their website. But things are changing, okay? Let's have a look at the board here. Carla Vernon is the CEO of the Honest Company. And Jessica Alba, which you probably know, she was the founder, and she made this company quite big, but unfortunately she was not the perfect one to run this company, so Carla took over. She became the CEO, Carla, in January of 23, so now 3 years ago, and she is doing a phenomenal job because Jessica Alba pretty much ran this company to the ground, almost. I mean, the stock price said otherwise, but the company was not in a good place. If we have a look at the numbers, then we got revenue. Revenue is down for the first 3 months compared to last year. I mean, 25 they got 92 million, and 24 they got 99 million, so almost 100 million. The gross margins were also down, and the adjusted EBITDA was also down. I mean, why would you buy a company if revenue, gross margins, and EBITDA is down? If you will have a look at the bottom here, the revenue for product categories or channels we are exiting accounted for 22 and 21% respectively of revenue for the 3 and 9 months ended September 30th, 2025. So what products are they exiting? So basically, before the September, October last year, they also sold clothing for babies, and they are exiting that one because it was not a high margin product. So they are now focusing on a higher margin products, but it also means that their revenue is going to decline. But does this really matter? Because I mean, the baby diapers, the face cream, the baby products, everything, Honest is a really strong brand. It's really a really strong brand. People are willing to pay for the safety of their children, so there's non-toxic ingredients in the diapers. They're willing to pay more for the sustainability. Plus, it's a high repeat products. Like, you're not just going to buy one of Honest products and then you're never going to buy one again. No. You're probably buying one multiple times a week. I mean, diapers, you can buy one, every other week, maybe. I'm not sure. I don't have kids. And the face products, you buy a new one when you're done. So it's pretty good. But this Honest stock price, right? They IPO'd at $23. So that's 10 times more than the company is worth today. Absolutely insane. So they were valued at what? Like $3 billion at the IPO in 2021. It's insane. It's insane. And then they have declined ever since. But they just in 2025 they were up, peaking at about $8 a share, and then they're down again. But I mean, you shouldn't really look at the stock price before, like in the past, because that's not what matters right now. What matters is this honest company, they are trying to set it up for the future, if that makes sense. So before the transformation 2.0 in September, they were focusing on growth. They have high costs because like the clothing area was really high cost, but it was also like the margins were not so big. If something were to happen or they didn't sell out of their inventory, it hit the margin pretty quick. And they had a lot of products, so they were not like focused on like baby products. It was also clothing, and it was face cream and stuff like that. But after the transformation 2.0, they are focusing now on more profitability. So they are focused on the products that actually makes them a lot of money. And they are focusing on the core products for the company, which have which have higher margins. If we will have a look at the revenue here for the last couple of years, the revenue from 2020 were like 300 million a year, where the trailing 12 months is 383. It's okay growth, not a lot, but it's all right. The gross profit went from 108 million to 149 million, which is pretty decent. It's very good, and I expect this to skyrocket, or not skyrocket, but to grow a lot the next couple of years, because now they're focusing on the higher margin products. If we have a look at the balance sheet here, we can see that the total common shares outstanding, that's not good. Like they had 34.1 total shares outstanding, and now they're up to 112. So the shareholders is being diluted quite a bit. But I mean, it is what it is. You would rather have a company that grows a lot in the future and then they dilute the shareholders a little bit, than you would own a company that doesn't grow and don't dilute the shareholders, right? If that makes sense. The very nice thing about Honest stock is that they are absolutely insane after Carla took over, because they got, if you look here down here, net debt is negative. They got more cash than they got debt. Okay, the book value per share is 1.7 at the moment. That's insane. I mean, the stock is trading at what, like 2.3, 2.4 maybe, and then the cash per share is 0.64 cents. That's a lot. That's quite a lot. If the stock price is only what, like $2.4. So if we have a look at my estimations here, it's just my estimations. It could be higher, it could be lower, whatever. So 2025, they got earnings per share of 0.08, and they got a PE of about 30, which means the share price is $2.4. 2026, I expect this earnings per share to go up to 0.1. And the PE of 30 to 35, which says the share price is about $3 to $3.5, and that's a lot of growth. That's a 50% increase. 2027, they are growing the earnings per share again with 20%, which means the earnings per share is 0.12, and a PE of about 35 to 40, doesn't really matter. So about $4 to $5 here in the share price in 2027. That's a double up. That's a double up in 2 years. We like that. The cool thing about this valuation I just made here is not that Honest company needs to see a lot of growth for this to happen. They just need Carla to execute right for this transformation 2.0 that they have put in place. And this here is why I think the market is wrong at the moment. If we have a look at the analysts, they are saying 4 is a buy, 2 is a hold, and 1 is a sell. And the average price target for the next 12 months is $3.8 a share. That's a 55% upside. And if you have a look at this, even the low one is $3. That's still a 30% increase from now. That's very good. And the high is $6. That would be absolutely insane, but I wouldn't mind if that were to happen, right? So the key factors for Honest here: revenue 383 million. They got a 273 million market cap. So the revenue is a lot higher than the market cap at the moment. You don't see that with a lot of companies. The net income is said to be 7.1 million last year compared to 6 million in 2024. This number is still an estimate because we haven't seen the Q4 results yet, so it's just my estimates, right? The gross margin grew from 38.8 to 38.2. I don't know why it says in 2023. It's 2024, of course. And the cash position is $71.5 million, which is absolutely insane. They got like, what is that? 1/4 of the market cap just sitting in cash. Absolutely phenomenal. And no debt. So this is my analysis of the transformation 2.0 here. So they're exiting the low margin segments like honest.com, which is their direct to consumer business. The apparel, so the clothing they make to the kids or to the babies. And then the Canadian market they are also exiting. So this is about 22% of the Q3 revenue, which is all this. But I mean, the margins were not that high, so why would you even spend money on it? Why not focus on the other products, which makes you a lot more money? So they're focusing on core high growth categories like wipes, personal care, and diapers. The wipes consumption grew 160% year to date for the Q3 2025, which is absolutely huge. So if this wipes is a high growth and a high margin like product, why would you even focus on honest.com and the clothing? If you could spend the same amount of money you put into that, to put into the wipes and maybe to some marketing and stuff like that, so that the wipes will grow even more, then you can make a lot of more money. And the short-term revenue disruption from exiting segments. So that's unfortunately, they are going to lose about like 20% of the revenue because of them exiting these segments, but it is what it is. You would rather have like a company which makes a lot of money and they are focused on the products that really makes the money than focusing on everything. That doesn't make money. That doesn't make sense either. So my 2026 to 2027 expectations, I believe the revenue stabilization, the organic revenue, I mean, they are exiting these segments, so they are expected to grow 4.6%. The margin expansions are focusing on high margin categories. Wipes are 37% gross margin, absolutely phenomenal. That's really good. And we got the market position. They are the number 1 position in natural baby personal care products. And that just shows you what kind of brand Honest is. It's really a good brand, right? They got a lot of brand value. And the cool thing is Carla, with this transformation 2.0, she's setting the company either up for a lot of profitability, so they are making a lot of money, or she's just setting the company up so it can be bought. Because right now it's at 300 million market cap. It's nothing. You have a look at like stocks like Kroger or something, they are in the billions. Honest is not that yet, but they are sustainable. It's an organic product. With the new parents, the people that are being parents today, they are more focusing on this organic and sustainability and stuff like that than my parents did. Honest is really a good brand, and that's mostly what it is, because I mean the balance sheet and the revenue and the margins and all of that at the moment is not that great if you would just have a look at the company's numbers. But because Honest is a strong brand and they got Jessica Alba as the founder and they got Carla as the CEO, I believe it's be quite a ride the next couple of years. But this is a highly competitive consumer goods market because there's a lot of diapers and a lot of wipes and a lot of personal cares out there, or personal care products out there. But because they got a very good brand and the customers are coming back to buy the products again. But again, this is not a risk-free investment at all, and it's not financial advice either. It's just my personal opinion. So this is not for short-term traders or people who wants to make a lot of money in 6 months. This is a long-term play that I've bought, and I'm probably going to buy more here in the next week or two. And the good thing about Honest is at the valuation they are at the moment, they really don't need perfection. They don't need a lot of growth and a lot of high margins, and they just need it to be executed right, like this transformation 2.0. And I'm sure they will do that. Then the question is if the stock market is going to follow. We don't know. We never know. Let me know in the comments, are you buying Honest stock, or do you own any Honest stock maybe? Thank you guys for watching. Bye bye.